Hello, everybody. Welcome to this evening's fundamental analysis webinar. As we get going, first, if you could please type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Thank you very much. My name's Troy. I'll be leading the session this evening. I'm a senior account manager with ABBO Trade. Keep in mind as we get going that obviously no one trade is guaranteed to win. I think we all understand we need to manage risk in a way that makes sense for ourselves. What we cover is meant to be educational in nature and not to be taken as financial advisement. And you can find our full risk disclosure statement on ABBO Trade's main website if you care to read it. Now, as we go through things, you'll basically be hopefully adding some knowledge, some tools to either your existing trading system or to develop a brand new system if you're new to things. Now, speaking of risk, there is a special tool on our mobile app, the ABBO mobile app, called ABBO Protect that is available on all the FX pairings, gold, silver, and maybe some more assets eventually, where you can protect your trades against all losses during defined time periods for a small premium cost. So it's something, if you haven't checked out the ABBO mobile app, that's one unique feature that you'll find that's on that app, along with some other features that you won't find on the MetaTrader 4 mobile app, the MT4 mobile app. So it's worth taking a look, get it on your mobile devices, and if you have any questions about it, check with your account managers. Now, as we get into looking at the fundamental news before we get on the live charts, keep in mind there are a couple types of fundamental news. One being scheduled announcements that are more regular in terms of timing and scope, more predictable in that sense. And then other types of fundamental news that would be more extraordinary, like breaking news about really any large story. Lately, it's been news about the coronavirus and the reopening of economies, that sort of thing. And in the past, it was breaking news about Brexit or the US-China trade war. All of these sorts of extraordinary stories, it's not scheduled when new information or breaking news is going to come out. So you have to account for unexpected news within your trading strategy if you want to take advantage of unknown opportunities that could arise, and also protect yourself against unforeseen breaking news stories that could work against existing positions. And so we'll talk a bit about those ideas as we go through the charts and the movements that occurred today and that look maybe promising moving through the rest of the day. And so let's take a look at some of the fundamental news that's happening. Now, on ABBO Trade's main website, I mentioned the ABBO mobile app. If you point at our trading platforms, you'll see one of the options is ABBO Trade Go. That's the mobile app. And you'll find some features on there. Here's the ABBO Protect feature. If you check the box, then it asks you how long would you like the protection to be, and it gives you a premium cost for that protection. And then any losses during the covered time period are added back to your account when the coverage ends, or if you close the trade before the time period's over. And any profits are yours to keep. The premium is charged right at the beginning. So it's a unique feature. It's something you can take advantage of. And something else you'll notice on the ABBO app, if you program your take profit or your stop loss, it calculates your exposure in your account currency for you. Based on the trade size and the distance to your stop loss or your take profit, it calculates how much profit you'd make or what your potential loss would be to that stop loss mark, etc. So it's very useful. You see in this image here, it's also calculating the margin requirement before you ever open the trade. So especially for people who are new to things, and even for experienced traders who don't want to take the time to calculate exposure all the time on their own or the potential profit, etc., it does that for you without having to use a separate calculator. So it's a nice tool. Now, if we take a look at some of the headlines, shale pioneer Chesapeake considers bankruptcy filing after oil rout. This is the picture with a lot of the shale industry in the US and any place else around the world, because it's not as easy to extract oil from shale as it is to drill it from the ground. And so lower prices will affect higher cost ways of getting oil first. And so we're starting to see some of that. And maybe that was part of some of the OPEC nations' plans or plan when they upped production during a pandemic, driving prices down, maybe to try and kill some of the competition. Looks like maybe it could be working. That sounds like bad news for the oil industry, but at the same time, if some of these shale producers, even if temporarily, close their doors or their spigots, I should say, then maybe that helps oil prices recover for the overall industry to be healthier. And then as prices come up, then naturally these shale oil drillers will come back online when it is deemed profitable again. But that's an interesting story there that, maybe it'll create a little higher floor for oil prices if some of the shale producers are kind of closing up shop for a while. Something to consider. All right, so some other headlines: over 80% of US small businesses expect longer impact of pandemic. That doesn't sound good. That's really the engine of the US economy, are small businesses. By far. It's the largest number of businesses in the US, and also I would say the largest impact on the US economy are the combination of all the small businesses. Not that the large corporations don't have a large effect, but small businesses are huge in the US when you add them all together. If 80% of them are expecting longer impact from this pandemic, that kind of tells you there's probably some bearishness on the markets today when you see headlines like that. And this was 6 hours ago, this article was posted. So you had 6 hours to see news like this, even more from this morning, and trade accordingly until at least the support levels were reached on the charts if you were trading down on major indices. And we'll take a look at what happened. So another headline: Dow slips on fear of new infection wave. So not only fear of small businesses having problems, but some fears when looking at Germany and South Korea, who started to reopen their economies before other nations. There are new outbreaks occurring. And so that also creates some doom and gloom, bearish pressure on the markets when you start to see the US in particular has really been starting to open in a lot of states. And then you see news like this that says, yeah, look what happened when these guys opened their economies, new outbreaks. So I think it's expected there will be new outbreaks. The question is how severe, how large will these outbreaks be, and can the hospital systems keep up with it? I think the whole idea in the beginning when they talked about flattening the curve of the infections wasn't to prevent infections necessarily, but to slow the rate of infections so hospitals could keep up. So it'll be interesting to see what happens as these new outbreaks are occurring, if the hospitals and the healthcare systems can keep up with the rate of infections or not. And I think probably hospitals are a bit more prepared now with ramping up the number of supplies and respirators and all of these things, maybe more prepared now than they were a month or two ago. So it'll be interesting to see how that occurs, but they created some initial fear on the markets today. Here's a bit of good news. Paving the way for US auto industry, Michigan factories to end coronavirus lockdown. Okay, Michigan's big for the auto industry. It used to be bigger than it is now, but it's starting to come back as a big production state for the auto industry, largely under Trump, really wanting to get the factories all back open and American production up. Before this pandemic, things were really booming. And it looks like this type of news could steal the show today, because you see, this was only 2 hours ago, right? So the positive news came out after all the fear, right? This positive news about ending lockdowns, auto industry maybe opening up. That's huge in the US anyways, auto industry. It's really huge for the world. And yeah, Mohammed, definitely there's been some bounce back in the markets, and that's exactly that was good timing that you said that, because just about a couple hours ago when this headline came out, when it was updated, that's really when the markets were bouncing. Okay, so we'll take a look at the charts and get an idea about it. Not a lot of announcements today, but some better than expected news out of China. Okay, you see these announcements were in green. And so, you know, new loans up makes sense. Governments are trying to assist the economy, China included, not just the US and European nations. China's also trying to help out. So loans are up, loan growth is up. All right, so those are positive numbers coming out of China, which might make some positivity on the markets as well. Overall, I guess we'd be saying that's mixed news, right? Some fear about viruses spreading. I think that was already expected that might occur though, but there was some fear today because of that. Maybe some fear over small businesses, but then some positive headlines also helping a bit of a recovery today. Now, those of you who watch the futures contracts on oil understand we trade on futures contracts. We've got the ability to trade on crude that will roll over, or you can choose the individual futures contracts if you don't want it to roll over. We've got different options now. And you can see the different prices. As you go further in the future, the price is higher because investors, if they have the right to hold the trades to a longer expiration date, believe the longer out it is, the more likely it is for the price to go up. You can see that in the futures contracts. All right. This isn't my prediction. This is what you see in the futures contract prices being higher the further out they go. Okay. So someone's willing to pay a higher price for the right to hold on to that position for a longer period of time. So it tells you a lot of folks are believing oil prices in the bigger picture will rise. Now, what do we see every single contract did today? They're in the red, right? A bit of fear hit the markets. We talked about that. So maybe you see that as opportunistic, oil prices pulling down. If you believe in the bigger picture that these futures contracts are telling you some kind of story, okay? If the story is mid to upper 30s as the months go by, then the lower it gets, as things look red today with oil, maybe that's opportunistic for you. All right, but it all depends how you view the bigger picture. If you believe what all these futures contracts are showing, then maybe you think a low price is an opportunistic price to make a move on oil. Okay, so any questions at this point before we get on the charts? Type okay if you're with me thus far. All right, good. That's partially my test to make sure the audio is still running good as well, because I wasn't getting any questions there. Okay, so let's go ahead. I'll jump on my demo account. You're free to be on your live account, make moves if you wish. Obviously understand any moves you make are because you like the move, not because of the way I might sound excited or not about particular ideas. But certainly you can employ any strategy concepts that we cover. Now, this is interesting. And we've talked about this, I don't know how many times in webinars. Coming out of the weekend, you see a large gap, 2 strategies you can trade, actually really 3 around a gap, okay? If the movement starts to refill the gap, you could trade to fill the gap, okay? So here's the gap at opening from Friday's close to last night's open, this morning's open. This is the MT4 platform. Okay, we also offer the MT5 and our web trading platform and web trader platform. But this is the MT4 platform. All of them will access your account. We'll talk about gold in a moment. Good question, Alistair. I'm just going to type, someone's saying they're not hearing me, so. Okay, just letting Mag know to check the audio on their side. Okay, so All right, so we see a gap here. The price gapped from Friday's close to this morning's open, or last night's open, depending on your time zone. And then the fill the gap strategy is if it starts to re-enter the gap without going to a higher point than the open price, you can trade to fill the gap and put your stop loss at a higher high than the open price. Up here would have been your stop loss potentially. And you trade until it fills whatever percent of the gap you like to take your profit on. Some want it to fill the entire gap, some half the gap, some 3/4 of the gap. That's up to each particular trader. Many times you will see that it retraces nearly the entire gap. Okay. In this case, it refilled the entire gap. Okay. So it gapped and then down it went. And it's not like you had to be watching the moment the market opened, right? Look how long it stayed up here. 30-minute candles, that's 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 5 or 6 hours before it really plunged and filled the gap. And if you had your stop loss above the opening price, it never challenged your stop loss and down it went. Okay. And this is the FTSE. Maybe I didn't mention what we're looking at here. This is the FTSE 100, and just textbook perfect movement for trading this fill the gap strategy. Now, why would you, maybe using the fundamental news, feel confident that it might fill the gap? Because there were some negative storylines coming out early today. Early on, after the market opened and gapped up, there were some negative doom and gloom articles about fear on the markets and fear about the spread in economies that were opening up and small businesses having fear. And so you saw this delayed sideways movement and a refilling of the entire gap. Soon as it broke into the gap, down it went, and that was an easy profit. Now, the second part, remember I said there's 3 ways to trade this, right? The second part of trading the gap is once it refills the gap, you trade back up, because whatever caused it to gap up most likely still exists. Okay. And what is that? It's the reopening of economies. The economies are reopening. You know, auto plants in the US, as we looked at, are starting to ramp up in Michigan to start producing cars again, etc. This is all around the world. China, European nations, more and more opening up. And so fear pulled it down. It filled the gap. Up it went and recreated that price that it gapped up almost entirely. And here we are right now. Okay. So 2 easy moves. Once it re-entered the gap, you trade to fill the gap. Once it hit the spot where it refilled the entire gap, you buy and put your stop loss X distance below Friday's close, below the gap price. And again, another nice winner. Okay, those were 2 really good moves. You may or may not have gotten out of this buy position after it filled the gap. I would have gotten out. I wouldn't still be in it. I probably would have gotten out about 75% of the distance up. That's usually my rule. Your rule can be different. I'm happy with 75% of the gap on the way down, and if it bounces off the bottom on the way up. And again, small risk to get below Friday's close with a stop loss when it's bouncing up, and small risk as it starts to refill the gap to put your stop loss above that open price that it never challenged. Yeah, we'll go over crude oil for sure. Okay, so the question is, well, what do I do now? And I did say there are 3 ways to trade around a gap, right? So one was if it starts to fill the gap, you trade to fill the gap. That would have worked nicely this time. Obviously, it doesn't work out that great every time, but you don't need to win every time, right? Especially when you're limiting the risk and many times a larger potential profit. Now it went back up through the gap. Now the question is, what's the next move? So the next move is, let's go to larger candles. And if it breaks above this high point that it reached after the market first opened, this is where it gapped to. It hit this price and hasn't challenged it since. So if it breaks above this high point, that's signs of a strong uptrend then. So what kind of pending order could you do, even if you didn't take advantage of these movements already? So what would you do if it, what kind of pending order gets you in if it breaks this high point of the day today? Yeah, buy stop. That's right. Mubarak. Yeah, a lot of the indices look the same. The DAX, the S&P, the Dow Jones, the Nikkei, they all had similar movement. I chose to show this one because it had the nicest gap. And you can do that. You can search the charts when the market opens and find which ones have the nicest gap. Okay? Type OK if you're still hearing me. I have someone else saying they're not. Okay, good. I have enough responses. Thank you. All right, so I'll tell Mohammed it's just him. Okay, so a buy stop up here might make sense to trade if there's enough momentum to break this high point that it opened at today. That establishes an uptrend. And I'll show you how that worked already just earlier. So let's go to the Dow Jones. Okay, this came down earlier, just a little while ago, to a nice support level. Okay, down here. You see this was resistance, resistance, breakthrough, support, support. And now today's fear brought it down. It reached the first major support level right there. The old resistance is the new support. And you see what happened? Tested it and bounced right up off. So this was a move on the recovery that was easy to see coming after you saw the headlines about US auto industry, and you also saw a nice support level. That's not a hard move to make with a small risk to the underside of the support right there. Okay. That and you know, we go back 1, 2, 3 hours and it was right down here. After all this dropping, nice support level, this was a really nice move. And looks like it just broke another resistance level here. Okay. There was another resistance and it just broke above that. So if you're going to ride this momentum up, the next resistance level is here. And the first support level is here. If you're going to put your stop loss below that first support level, that's this broken resistance level right here, should become support. Could put a stop loss below here, see if this momentum rides to the next resistance level. Okay. What stopped, Alina? You asked, did something happen? You said it stopped. Please, Alina, expand on that thought, if you would. Okay, so yeah, anyone who's having audio problems, please check your settings. Although if you're having audio problems, you're not going to hear me say that. You'll see that I typed it to you. All right, so let's take a look then at oil. We've had some requests. A lot of the indices look the same, uptrending, breaking resistance levels right now. You could ride that wave without risking much to the underside of those broken resistances, which should act as support now. Dan, you can catch the recordings on our YouTube channel. Okay, just go to YouTube, keyword search, ABBO Trade channel. You'll find it. There's a section for English webinars. You see Naim does webinars. He's our chief analyst, and as well as mine. Okay, let's look at crude oil. What's happening? So crude oil had an initial rush up. Could be with the news about US shale, right? Remember I said that could help oil prices actually rise if shale companies are maybe going to go out of business, and you see this big rush up earlier today. All right, but then oil has come down with some of the fear, the doom and gloom today. Now, remember the futures contracts we looked at. They all, as you go further out, are higher. The prices are higher the further you go out. That shows that many investors believe that the further out you go, the higher the prices might climb. Doesn't mean they're right, but that's the trend we're seeing in the futures contract. So what might be an opportunistic price? What if this downtrend drops to this support level here. Okay, that's a general level of support right about in this area. We see it broke it by a little here, support, support, support. So if this downtrend reaches what you deem to be a significant support level, that could be an opportunistic spot for what kind of pending order? Crude oil, switch to pending. What kind of pending order would buy from a lower point? You see there are 4 types. Buy limit, exactly. Good. Buy limit would buy from a lower point. You pick your spot that you think would be a good price if you're bullish on oil in the longer term, right? And I'm only judging that on 2 things. Economies are starting to open up, and the futures contracts are higher the further out you go. Okay, so it's just something to consider. If you want to trade the downtrend, by all means, you can do that as well. It hasn't reached the support level yet. You certainly could trade down. Okay, I tend to want to go in the direction of the fundamentals, and the fundamentals maybe are leaning towards a higher floor for oil than we've seen in the past weeks, and maybe some reason for bullishness. Okay, that's what the fundamentals are showing me. You could read them differently, but that's what I see. Now, buy limit, pending order would get you in here. By the way, if you're using the mobile app, the ABBO Mobile App, you don't have to know whether it's buy limit, buy stop, sell limit, sell stop. You just tell the app price, the price you want, and it makes it the right one. It makes it the right kind of pending order automatically. You never have to pick buy limit, buy stop, sell stop. With the mobile app, you just tell it at what price you want to buy or at what price you want to sell. It becomes the correct type of pending order automatically on the mobile app. Okay. But yeah, I think in general, there's some opportunity here if oil reaches a low point to make a move if you believe the floor has gotten higher on oil. Okay. Any questions on that? Some questions about airline companies. You know, there are some pretty major investors out there that have said airlines are too hard to read right now. It doesn't mean that that's necessarily true for everybody. I think it was Warren Buffett that was talking about Boeing, and he said, "Oh, airlines are too hard to read right now. He's not interested." And what he meant by that, I think, is there are so many moving variables. When will flights open back up? Will people be afraid to fly or not? How quickly could they start to, get things back online in full? I think you're going to see a lot of volatility with the airlines. And if you find nice price levels, support levels, resistance levels, I think you could take advantage of some well-timed entry points because you likely could see some big movement in both directions. It's a very good question. And I think the technical trading on airlines, on the stocks, could be very good. Marius is saying earlier today, Saudi Arabia announced more production cuts. Yeah, this is the trend. The oil producing nations really want to see the prices back up. As much as they are enjoying the pain that the shale industry is going through in the US, they're going through a lot of their own pain as well. And so I think pretty much all the oil producing nations are ready to see oil prices go back up. This pandemic maybe hit things worse than they thought it was going to. Prices on spot got down to zero on oil. So I think it's something nobody really anticipated it would get that bad. And so I think there, like I was saying, if you feel there are reasons for bullishness on oil, you might be looking at a nice potential entry point here soon, if not already. You might like the current price for entry points on oil. And what you're saying, Marius, just goes right into that. Goes right into the other fundamentals that we saw in the futures contracts. Okay. Some questions about S&P 500. Indices in general would be related to oil. And what I mean by that is The better the economy is doing overall around the world, it's usually good for oil prices to go up, okay, in a general sense. So yeah, S&P 500, if it's doing well, breaking through resistance, climbing, then probably oil has more reason to be bullish that day, okay? Yeah, listen, Boeing stock's up now, and maybe you find a nice spot if it goes high enough to short it. If it breaks enough resistance, you can go long. Like I was just saying, I think the airline stocks are going to have a lot of movement with a lot of opportunities in both directions. Yeah, if they're transporting a lot of ventilators, that helps, but I don't think it makes up for millions of passengers flying, each week, each month to transport ventilators around. But maybe it helps a little bit for them. Let's take a look at gold. I think we see what's happening here with oil. And what do I see technically with oil? I see this high point right here broke this resistance. You see? Resistance, 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 broken to a higher high point. And now it's giving maybe an opportunistic entry point if you like this support. Okay, the next resistance level is up here. Maybe 2670. That's this next resistance on the screen. All right, so let's look at gold. As has been par for the course, a lot of times we've seen gold dropping with bad news and rising with good news. So oil already did its dance downward today. And so we're reaching a nice support level. Markets are starting to rise a bit more, maybe giving people confidence to liquidate, get rid of their liquidated cash and buy back into gold for the longer, maybe what's viewed as potential recession numbers coming. And so some think that the price of gold now is perhaps a bargain. If you think in the coming quarter, 2 quarters, there's going to be recessions in many of the economies around the world because of all of the quarantining that went on, GDP numbers down, production numbers down, jobs numbers bad, etc. If that's your view, then as oil or as gold hits lower price levels, you might see that as opportunistic to buy in, okay, for the coming really bad economic numbers that are expected over the next quarter, all right, or even beyond the next quarter. So it looks like gold has come down nicely after charging up, okay, and so this looks like a potential opportunity. If you like the idea of going long on gold, this looks like a potential opportunity on a support level to not have to risk much if it breaks the support, okay? And since we see the indices have gone up bullishly of late, I know it's backwards, but of late, as the indices have climbed, gold has gone up. And again, we talked about that relationship where usually gold was dropping with good economic sentiment in normal times. With this pandemic, fear was so high that when news was bad, gold was dropping because many gold investors wanted to liquidate and have cash in hand for the pending potential emergencies that were coming. And as there's some good news about economies reopening and such, those who liquidated their gold feel safer to buy back into it, to hold gold for a while. And so with the indices climbing, gold reaching a nice support level here, that's a limited risk shot at a potential bullish run on gold if it comes up off that support, with your stop loss not having to be very far away. Okay. Obviously, there's no guarantee on that, but it looks like a nice potential opportunity. All right. And, I always say you don't have to try and guess the markets. If it breaks this support, there must have been some opposite news, and you certainly could have a sell stop down here right where your stop loss would be on your buy. You could back yourself up with a sell stop right down here below this support. Something significant must have changed in the markets if this support level breaks enough to hit a sell stop down here. Okay, and then your limited risk back up to a stop loss back above if that happens. Okay, any questions on that with gold? Yeah, sure, we can look at Bitcoin. Absolutely. Just give me one moment. I'm going to put you all on pause for a second, on mute. Okay, I apologize. I'm back. All right, so let's take a look then at Bitcoin. We've got Bitcoin USD we'll take a look at. Okay, we see Bitcoin setting up similar to gold. And by the way, for months we were following the cryptocurrencies and Bitcoin in particular. And Bitcoin was mimicking gold as a safe haven for some time. It was very interesting to watch. So not exactly the same movements, but similar movements. And so that's a nice support level there on Bitcoin. It's come down quite a bit. So if you expect maybe a run back in to safe havens, remember, why would Bitcoin maybe be viewed as a safe haven like gold? Why, if there's expectation of maybe recession in major economies around the world over the next quarter, why would people buy Bitcoin like they would buy gold? It's limited, okay. It's also nationless, right? Bitcoin, like gold, doesn't have one nation to call home. Decentralized, exactly. Good. Decentralized. So just like oil is decentralized, gold is decentralized, cryptocurrencies are decentralized as well. If one nation is doing bad, it doesn't affect any particular cryptocurrency like it would their own country's currency, okay, or the stocks from that country, the indices, etc. So Bitcoin has moved very similar to safe havens over the past year, and so this looks to be a nice support level. You could have limited risk to the underside of this support. Maybe you don't have to get below this large wick here and this spike down here, but maybe below the majority of the support level here, 2, 3, 4 points of contact right at this price level that it didn't break. And so to get below those, you don't have to be down much, okay? And your potential profit, if it rises to the old support level here that wasn't that long ago, okay? This was just into late last week. We're talking potential climb from 85, 81 right now to almost 9,500 to this resistance level. So what's that, about 5 times potential profit to this resistance level than you would risk if it breaks that support down here, okay? So Bitcoin looks to be set up, if you like the bullish move, for an opportunistic entry point where you don't have to risk as much as the potential profit, okay? And since there was some fear on the markets today, and there's been correction on the indices, and looks like gold might be prepared for a correction, perhaps you like this support level to correct this drop right here with a movement back up, okay? Obviously, as I always say, you can back things up with a sell stop if it breaks the support. If it goes low enough that you say, wow, it's really got downward momentum, not only do you get out on your buy, but you can get in with a sell stop down here. Again, you have primary moves, right, that you believe in more, and then you can have secondary moves to back up those primary moves in case things go the opposite of what you think, right? Now, what you think could be the opposite of what I think. You might say, no, I don't like the buy. I'll only set up a sell stop if it breaks the support. That's okay too. But again, You don't have to try and guess the market necessarily. You can take both shots with limited risk. And in the end, win, even if you only win on 1 out of the 2, or 2 out of, or 1 out of 3 even, with the type of setups we're looking at. Yeah, Tom, traditionally the Swiss franc and the yen are safe havens, okay? Safe haven currencies. More so ever since the big crash with the Swiss franc back a while back, a few years back. The yen seems to react more as a safe haven than the Swiss franc, but yeah, traditionally both of those currencies are a safe haven currency. So if we look at let's look at USD JPY or Euro JPY. Let's look at Euro JPY. We see the yen was weakening today. If you think the safe havens might strengthen now, if there's a correction coming with safe havens strengthening, then wow, what an opportunistic entry point here, right? If you think the euro should drop now against the yen, if you think the safe havens will strengthen, if you believe gold will strengthen, Bitcoin will strengthen, then perhaps the yen might also strengthen. So we take a look, we look at 1 hour candles, look at the technicals on this. There's a old resistance / support level. This was the support, breakthrough, resistance, and down it went. And here it came up, and look right where it stopped. It's not a coincidence. These technical looks with the price levels show you that where movements tend to stall or break through with large momentous type movements, it's not a coincidence, right? Look at the old support level here. The breakthrough becomes resistance here. And then you see right on cue, that price becomes resistance again. So if you trust that resistance level and you expect a correction, you can do a market sell as soon as you deem maybe that there's a downtrend. Okay, you see high point, high point, high point getting lower maybe, right? I see low point getting lower here. So you could say, okay, I'll take a shot if it's going to correct. Market sell now maybe, right? If you believe that the safe havens are going to correct and strengthen right now. Do you have to risk much? No, because if it breaks above these high points here, that's an uptrend again, right? If this high point reverses and goes above these high points, now it's a new uptrend. You don't have to risk much. You get out on that sell maybe at that point. And if it does correct, look how much potential it has to drop, maybe to this old resistance level here that had a breakthrough. So this distance to the first major support level here is about 2-3 times the distance that you'd risk to a stop loss above these high points. And again, it's not just this resistance here that you see, these 2 high points, that corresponds, remember, over here with a much larger, more long-standing support resistance price level back here that corresponds with this delay and begin of a small downtrend. Okay, so it's not a bad look. Okay, we'll do one more. We'll do one more look at an asset. I'm getting requested Euro USD. I want to first look, Charles, at your question about gold. You're saying that gold, if gold opens below Friday's close, should you then go short on gold? Many times after an open with a gap, you'll see it refill back up. Okay, and then you got to see if it breaks back above. In your example, if it opened lower, if it breaks back above the prior Friday's close, now you've got a pretty strong uptrend. If it fills the gap and comes back down without breaking above Friday's close, then that continues the bearish momentum. So there's no one set rule on it, but we went over how to trade the gap at the start of today's webinar on a different asset on one of the indices, but it would work the same with gold or oil or anything else. If it starts to refill the gap, you can trade to fill the gap with limited risk if it reverses back out. If it fills the gap, you can trade for it to retrace back again to the opening price with limited risk if it breaks past Friday's close. and then you go the opposite direction if it breaks past that Friday's close, without ever even having to look necessarily at the fundamentals. That's a pure technical strategy. If you combine it with the fundamentals, then it's even more powerful as to which directions, which parts of that strategy you would prefer to trade. Okay, so let's take a look then. What's gold doing? Let's take a quick peek. We see it's still respecting the support level, but trying to decide what to do. Let's take a look at EURUSD that someone requested. We'll go to 4-hour candles. Okay, USD has been strengthening somewhat as a preferred currency during times of fear. So we saw the dollar index had some strengthening today, and we can see in specific pairing, Euro USD, the USD strengthened against the Euro as well. Okay, so we talk about the yen being a safe haven, the Swiss franc. The US dollar, a lot of people trust as well during times of fear on the markets if they want to keep a currency in their hands rather than Bitcoin or gold. And so US dollar index has strengthened quite a bit through the pandemic and has had times of up and down depending on the sentiment on the market. What we've seen is negative sentiment, US dollar index strengthening against the pairings against other currencies, and during times of economic optimism, less of a rush to the US dollar, more of a tendency for maybe the euro to gain against the USD. But obviously, you also have to pay specific attention to what the USD is paired against. If there's good news out of the European Union and there's optimism on the markets, then the euro would climb probably rapidly against the USD as people feel safe to invest in other currencies other than the USD or the yen. So right now, what do I see? I see a downtrend still continuing on Euro USD. If we go to 30-minute candles, it just broke to another low point here. You see the low points are still getting lower. High points are still getting lower. I don't see an uptrend yet on Euro USD. Okay, doesn't mean that you can't go long on this. We see there's a support level right about here. Okay, resistance, resistance, breakthrough. It got below that support. It broke it. This downtrend broke it here. Now, if this goes back above this, what should be resistance now that it's below, if it goes back above that resistance and establishes an uptrend, it might be opportunistic spot to go long on the euro. Right now, it's not my favorite look. It's not my favorite look, this Euro USD. It broke that support, but not in a strong way. It broke the support and then fizzled out just below it. That's not a strong breakthrough with a downtrend happening right after it. And to me, it's not an asset I'm looking to trade on with that setup technically. You might like it, depending on how you feel about the fundamentals coming out of the European Union and the US. USD JPY, same thing as the Euro JPY, right? A lot of optimism, especially in the USD. Remember, the USD has been strengthening even when other currencies have weakened. Let's look at resistance level. Look at this resistance level here. It's close. It's not there yet. Resistance, 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 resistance. Okay, that's a beautiful resistance level. What kind of pending order might you prepare in case it reaches this resistance up here? What kind of pending order would sell if the price reaches this resistance level right here? Yeah, sell limit, and you wouldn't have to risk much with your stop loss just above that resistance. Okay. No guarantee on that, right? But boy, that's an opportunistic entry point if you think eventually fear will come back enough to strengthen the yen. But maybe you're waiting until a resistance level at the same time. Okay, I really like that resistance level. It's been there for quite a while on the 4-hour candles. This goes back into mid-April. So if the price reaches this resistance, I think that's a significant price level that could bring a large potential pullback. And you don't have to risk much because obviously there's no guarantee on any of these, but that's an opportunistic entry point where you don't have to risk much and the potential could be quite large. Okay, everybody, thank you for joining. I think this is a good place to stop. Huge opportunity for continued momentum on the indices. Also, we looked at huge opportunity on oil. If you like those futures contracts, what the tea leaves are reading on those, and also some opportunity on the safe havens, it looks like. Okay, thank you everybody for joining. Yeah, the recording of this session should be posted by tomorrow on the YouTube channel. All right, bye everybody, thank you.